Friends, morning. How is everyone doing? Obviously, we are going to get ready for the market here soon. The Feds will be releasing CPI reports, inflation for a certain sector, and we'll see what happens here. Will they talk about rate cuts? Maybe, maybe not. And next week, undoubtedly, we probably will be having another 25 basis rate cut. Friends, hope you're doing well. Really do mean that. SoFi, obviously, yesterday, last 48 hours trading with SoFi have been fantastic because they allowed people to buy at one of the last low spots. We could see it for a minute or maybe ever. Okay. The market sold off here Wednesday, the 22nd, sold off dramatically. Nothing was safe, everything pretty much. And it told us where a lot of things were the worst levels of it could go. We saw that with a lot of stocks. Okay. I even Applied Digital, talk about that. But SoFi still holding this very high mid $20 range. And SoFi is saying, hey, I am pushing up. I am going for this next level of running, and you're either coming with me or you're not. And we're seeing that. So SoFi, when you look at this chart, look at this chart right now from the beginning of this month till now. This is like essentially every up and down moment. This is someone making a tweet, having an interview, or saying something. This is like Trump tweets something, then it goes back and says, actually, it's not that big of a deal. Then Sam Altman says something negative about AI. Boom, market drops. Then and then China, tariff, Russia, Google, ChatGPT. It's like pinball right now. So now we're going into this week. Next week, obviously, we'll wrap up what the Fed say here. What is Friday going to bring? Maybe the market will care, not care what's about to be said. But next week, we're having next week is the week. That is like heavy duty, a lot of different, all kinds of stocks, companies releasing quarterlies, and we'll see what happens. And then the Fed's meeting up. So the market even today rebounding quite a bit. There's a lot of stocks that came back heavy today. If people pushed in Wednesday, you were ripping on 23rd here, Thursday. So now Friday, SoFi, like I said, it's trying to get back to this $29, $30 position. It wants to get there so bad. And I do think we're living in the last moments here, the end days, if you will, of SoFi, being in $20 range. And two, obviously, I don't want to miss this. SoFi's next week going to release their third quarterly. In this third quarterly, we're going to see how good it is. Will it be more than likely in $900 million range? Will it be really close to $1 billion? Where's it going to be? It's exciting. This is an exciting moment. A lot of people have been in SoFi for some time. Maybe you've been here a few months, 6 months, a year, 2 years, 3 years, 4 years. Maybe you were one of the people that bought SoFi when it first came to market pre-COVID, right around that moment. Then the world shut down. SoFi looked like it may potentially go out of business because of a lot of their business at that moment was student loans, and the world stopped paying student loans. So SoFi was in dramatic stress level. But now SoFi has built built themselves out of that, pushed themselves out of it, and built themselves into the strong pillar of this banking system that undoubtedly is going to be one of the top 10 banking companies in the next 10 years, more than likely. That's not even me saying that. That's just that's kind of what's going around right now with, major investing groups, banks, even saying that this is the real deal right now with SoFi. So, I think that conversation goes along with Hood too. I think Robinhood and SoFi are the next generation of banks. I really do mean that. They are obviously poking into the sector of software with banking, and that is working for them aggressively. They're not focusing on, I've said this before, but they're not focusing on brick and mortar stores. They're focusing on how efficient and how fast can a person make an account with them, get money with them, take money out, get a loan, car loan, house loan, all this kind of stuff without having to make appointments, do things. Just boom, right there, open your app, there you go. That is kind of what they're focusing on, and they're achieving it. And the newer generation, obviously, is what they want. I think automated stuff is just where things are going. I can give my whole spiel about robotics, all that kind of stuff. I think we're getting into a world, probably the next decade, maybe sooner than that, where things are, car dealers, real estate agents, those will be things of like, maybe our children or our children's children will be like, what's a real estate agent? What's a car salesman? What they may just be things that are just kind of gone and done with, like they're just old professions, because we're seeing more of this automated system come out in the world where, customer service stuff is just not there. And what customer service will be there? It will be AI. It will be robotics. So that is kind of, this is why Elon Musk says you can either choose to work in the future or not to choose, but still, people will be taken care of. Whatever he means by that, I don't want to push into that, but the automated world is coming, and SoFi is pushing into that 100% with their technology. And two, the whole crypto conversation, SoFi is really pushing into that, where other banks are kind of lacking and maybe not taking it as aggressive as they should. SoFi and Robinhood, are both like really, really pushing into that. And that could be something that really leapfrogs both these companies, over some major banks that we have in our banking system today. So that's a real big thing right there. So before I start talking about Applied Digital, just looking at SoFi here specifically on this candlestick chart, obviously it's a huge battle right now to keep SoFi in this general cycle of this $27, $28 range. $29, it's trying its hardest here, but it's hard to say that the market right now is in this organic stage, because I don't know if it's even natural to say that most of the market this year has been organic. This has been the most insane market this year, but right now, a lot of this, what we're looking at this cycle right now, is just like drama that we've been going through here. So it's a situation of that the market at this moment right now is potentially we're going into another heavy week of earnings. The Feds will be talking in the morning, any moment here, depending on where you're watching this, or they've already sunk the ship again, but with the reports. But two, next week, nonetheless, the Feds will be talking. We'll have heavy rate cuts. SoFi, SoFi will, if SoFi continues to do what they've been doing and come out with an aggressive quarterly here, okay, it's gonna clean up some of this lost numbers where we've been here. We'll easily swing back into 30. The reason why I talk about Robinhood, is because Robinhood has gotten a little further ahead sooner than SoFi here on quarterlies. If you've been following Robinhood, they leapfrog into that $1 billion quarterly early at the beginning of the year here, and that really took them from a pretty decent price stock to $50, $60 to now, looking at this 130, 40, 50 range, or where we could be, just this anchor spot that it seems to be in now. That's aggressive. So in SoFi, I think some of us would argue that SoFi is doing better on the banking side than what Robinhood's doing and trying to do. What Robinhood's really trying to do. And, this is why I say I think both of them are just going to continue to do well into the future, because they're both unique. They're both odd situations right now, what they're pushing into, just the different kind of banking they do, but it's speaking to a new, the new generation. SoFi could have a hot year in 2026. This could be the year where, investors are like, I am so glad I waited for this moment. I think that could be a lot of what we're looking at. And that's not just me saying that. That's not just me making up Fugazi right now. That is a general investor conversation right now with a lot of people. These next two quarterlies, obviously Q3 here, focusing on that, but Q3, Q4 here really will tell the tape of how good SoFi did here in 2025. And if 2025 is this aggressive, more than likely it's just going to keep getting more aggressive. As a company gets into a cycle of growth, they will continue that cycle nonetheless. I mean, they will just keep adding more customers because they're getting more money. They're able to advertise. They're able to push. They're able to allocate their money into bigger and better things. And that's what we've been watching with Sofi, and that will continue to get more aggressive here nonetheless. So, yeah, be excited. Next week should be a really good week for us. We'll see what Friday does here, but yeah, next week, really excited. All right, talking about Applied Digital. So, like I said, Applied Digital here came out with this aggressive quarterly here, and the stock went from being pretty expensive, wow, this is doing really good, to like, oh my God, this is crazy. So when we had the sell-off here, midweek hump day here in the market, Applied Digital sold off to just a measly $30. Okay, so for the bears, they were like, the bulls here are still pushing, and right today, Applied Digital shot right back into this, mid $30 range, and this is crazy. This stock is, I think this stock is going to be heavy manipulated the rest of until we see things maybe not so good news, and that's the thing. And I do think that we're watching a situation. So even if Applied Digital releases their next quarterly and it's just not as big as the one they just had, I don't think it's going to matter, because a lot of what we saw last year and into this year, where Applied Digital wasn't hitting a lot of quarterlies, the stock was still moving aggressively. Well, too, because of some good news, partnerships, build on, literally. But two, they were in this range of producing all new high revenue. So they weren't hitting quarterlies, but the revenue had never been so high. So it was still showing a strong aggression in moving up. And that's where we're at now, where Applied Digital has just come out with the biggest quarterly they've ever released. And now the stock is just going freaking bananas. And now we're starting to see a lot of focus go into data centers. Okay. So this is where Applied Digital is running here. So where I look at this safe zone still, this safe zone right now is obviously, Applied Digital is not wanting to let go of this $30 position whatsoever. I think that this will be a highly manipulated stock for a while, where people are going to have to pay a premium, a high price, to get into it. And what if price of what's coming here. So that what if premium price stock, high price, that could easily push into $40, $50 here. Now, obviously, I would expect that to last a minute before we get there. We may need to get to the end of the year, but two, it depends how aggressive the market's about to get off potential 2 more rate cuts coming here. 2 rate cuts, not 2 more, but 2 rate cuts off the last one. Yeah, I mean, I just look at this and I go like, this is wild. This is absolutely wild. It doesn't good things sometimes just doesn't have to make, they don't have to make a lot of sense. I know a lot of people look at this right now and go like, I'm out. That's fine. That is totally fine. I am not telling you to do whatever here. What I am saying is that I think this is just kind of going to be what's going to happen here. If this company keeps coming out with these aggressive quarterlies, even if the next quarterly they don't meet what they're supposed to, or they're short of this last quarterly, maybe it's just like 58 million. Maybe it's still in the $50 million range. This price of where it's at right now is still probably going to stay. This is probably just going to be where it's going to be. Until we see something different here, I think this is just going to be a little bit of a roller coaster ride for investors, where it's going to be, you're going to, maybe get so high up, you're like, oh my God, I'm really scared. What should I do? This is a lot of money we're seeing right now. So yeah, it's exciting. This is really exciting right now with Applied Digital. This is totally blown me away. I mean, I was calling the stock at $15, $18, $20 at the most. And now this is happening. So this is really crazy. So friends, just to keep it simple, keep it safe and sweet here. That's what I think is going on here. I'm excited. Be excited. This is going to be exciting next 2 weeks in the market here. Next 3 weeks, really. And I'm curious what the Feds are going to say this week and next week. And yeah, let's get back into the role of seeing some good things happen here. So take care of yourself, everyone. I will talk to you soon. Bye.